Hi folks, this is Tony for aminutetomidnight.com and the A Minute to Midnight show. Don't forget to check out our website, aminutetomidnight.com, and we do place all our articles and shows on there. Today I've got a very interesting show with the return of Lynette Zang. I'm very pleased to be able to welcome Lynette Zang back on the A Minute to Midnight show. We've had Lynette on a few times and I always thoroughly enjoy talking to you, Lynette, so it's really nice to have you back today.
Well, I always enjoy talking to you too, Tony, so I'm very happy to be here today.
It's always fun and the time seems to absolutely fly by, that's for sure. Yeah, so it's
you always ask the best questions.
Okay, I'm going to start off with something a friend asked me yesterday, and he was saying, look, I need, to make some income. He said, having some gold and stuff sitting here in physical form, that's not actually making me any money. And he's saying, should I be taking any risk? What do I do with this? Is it worth risking anything in the stock market, or do I just sit here and wait for doomsday? What do I do? So I thought, okay, maybe that's a place to start.
Well, that's actually a really good place to start, because really when you talk about making money, you're talking about making fiat money, which is really the part that is drastically under attack. Now, there are some people that, let's say they have dividend-paying stocks or interest-bearing bonds, and they're actually using that income. So there's two parts to this question. If it is purely about speculation, then you want to be looking at what is the undervalued asset inside of the overall trend cycle. And stocks are overvalued, bonds are overvalued, any fiat money products. So that means the ETFs, the mutual funds, the real estate. These are the things that were targeted for reflation. So if it's actually about gains, then, personally, my preference is to hold the lion's share of my wealth in an undervalued asset that is in a long-term positive trend, which is both gold and silver, simply because the fiat currencies, so the New Zealand dollar, the US dollar, the yen, all of them, are in a negative trend, and you know that regardless of what anybody says, because inflation erodes its value, and that is by design. So that's the one part. If it's just about speculation, frankly, you are much better off sitting with your gold and silver and allowing the central bankers and markets to do what they're going to do. If, however, you are generating income from those fiat money intangible assets and you're not comfortable holding them, then frankly, the choice that I make and that I have made is I liquidate them, but take about a year's worth of that income and put it back. And every month, if that's how you were gathering your income from it, then you pull that little bit of fiat out and you put it into that income, and you allow cash, which at least at this juncture will protect your principal, make up for that income. And the rest of it, yes, you sit in the gold and the silver. This is a monetary issue. Gold and silver are monetary metals. You cannot fix a too much debt problem by adding more debt, and the debt is not payable. It has to reset, and the system is at critical level right now. So no, I don't think you should keep any wealth in the system. I don't have more than a certain level of cash that I need to, because that's going to be most recognized initially.
Yep. Okay.
Does that answer his question?
Yeah. So the thing is, like the stock market, what we saw in December, it was looking awful. It was going to, starting to crash, worst December and so on. Then January, it started going up and rebounding again. February has seemed to be in a bit of a mixture of up and down so far. What's really going on? Is this all just stock buybacks and plunge protection team stuff stopping it, or is there a sort of a general trend starting to go back up again? What do you think?
No. Yeah, this is really all managed because they need you to keep your wealth in there. This is not, and keep in mind, At the same time, they're talking about a global slowdown and how it's much worse than they had anticipated, but certainly that's not going to lead to a recession. No, it's going to lead to a crisis. It's a crisis of debt. So they can, on the short term, especially with all of the derivative bet products that are out there, it's very cheap to move the market in any direction that you want to for a minute. But the overall trend, even though the markets have gone up in January and they're higher than they were, at Christmas time, excuse me, where they hit a low, do not make any mistake about this. We are not in a positive trend cycle there. We are in a negative one, and we've got Brexit coming up, and we've got a global slowdown that is already in place. You had the yield curve invert. I never hear anybody talk about this. The yield curve in China inverted in May of 2017. Normally, when you get that yield curve inversion where the lower rates go pay more than the longer term rates do, shorter rates pay more than the longer rates, that's an indication that there is a recession on the horizon, and that just happened in the US in December. So you've got the world's two largest economies, both with yield curve inversions and a global slowdown. So no, really ask yourself, why would there be a bull market? Market's overvalued.
Yeah.
Why would there be a bull market?
So are they trying to keep this whole thing flowing along until they're ready to let it crash so they can replace it with the new system? Is that what
they will? Yes, exactly. They will attempt to keep it together. But here's the thing, Tony. They'll keep the markets together as long as it fiscally makes sense for them to do so. So what would determine that? I believe, without a doubt in my mind, that what will determine that is who is holding most of the risk. When it's the elite at the top, it's not too expensive. We certainly saw what's been happening since 2008, not just in 2008, but since 2008. But it really does look to me like enough risk has been transferred to the public, like who's really buying all of the sovereign debt? Well, it's the pension funds and the retirement plans. All right, that risk has been transferred to the public. Who's really sitting in the stock market? Well, we know the insiders have been getting out in droves. That money's been, again, going into ETFs, mutual funds, the pension plans, the retirement plans. So, and the same thing with like the REITs, so the real estate derivative products, they've been going into the masses. The smartest guys in the room are getting out. And by the way, let us not forget that for 2018, the central banks bought as much gold added to their gold positions as they did in 1971 when Nixon closed the gold window and handed all the power of inflation over to the central banks.
Now, because that was actually going to be my next question, was about the central banks and the buying of gold. Now, which central banks are doing it? Is the US doing it, or is it just Russia and China and Germany and places like that?
Well, I'm glad you asked that question. It does not appear that the US is doing it. But what is so notable about the level of central bank gold buying has been a massive increase in the numbers of central banks that are adding to their gold position. On gold.org, you can read that whole thing for yourself because it goes into it. But an increase of 74% of gold buying for central banks year over year. That was the increase for 2018. So, yes, Russia and China and India, they're all adding to it, but it's a whole bunch more than that. It's a broadening of the base of buyers or central bank gold buyers. What do you think they're preparing for?
Yeah. So why do you think the US is not following the trend? And, well, do you think there's still gold in Fort Knox, or is it all gone?
Well, I'm pretty sure it's not there.
Yeah.
I'm pretty sure that no matter what the central banks say, between the leasing policies and all sorts of other manipulations, it's paper. You can't verify it. And why the US isn't doing it, maybe kind of like what happened with Great Britain. They knew they weren't holding status as the world reserve currency anymore. They're not sitting on gold anymore. I don't know why Bank of Canada sold all of their gold, but these are the central banks in the countries that are probably going to be left. I'm sorry to say this, especially since this is where I live, but we're losing our power, and that power is floating more toward China, India, Russia, and Saudi Arabia making an agreement to come together and manage all of the global oil market, along with China, having the exchange where you can buy oil for yuan and gold. So there's a massive power shift that's happening, and gold ownership is certainly key among that. If
Interesting.
I were part of the central bank, I would be buying gold hand over fist. And I am my own
Yeah.
sense.
Which is kind of does make me wonder about the whole the fact that the US and countries like that are not. I mean, is it part of the managed plan to remove them from being the central powerhouses, and they're doing it knowingly? I mean, the fact that they never audit it, hasn't been audited, Fort Knox gold. You have somebody wandering in there and say, "Oh yeah, I saw the gold." No proof offered, but
Nor has the position been altered by even 1/16th of an ounce. Since 1952, it's been exactly the same number. Oh yeah, that'd be accurate.
yeah.
Even more important, why you should become your own central banker and your own banker, for that matter.
So the way the things are going at the moment, because the average person still thinks everything's going along swimmingly. They see the stock market doing what it's doing, going up and going down a bit, and there's a little bit of panic, and then, oh no, it's fine, and they carry on accumulating debt or whatever, and think this is going to continue on forever, which we know it can't. But well, how long could they continue this hypothetically, with the printing money and so on? And or where does it get to the point where the debt is too much that they can't service it? How does it relate to GDP and all that? So maybe we could do with a bit of explaining as to how that works.
Okay, well, number one, we have been at the point where we could not repay this debt for some time now. And when I did a study in 2000, and I think it was 2009, 77 at that time, so it's worse now, but 77% of the debt that we were servicing was compounding interest.
Yeah.
So we've already gotten to that point. The drop dead deadline, although I'm not saying nothing happens between now and then, but the drop dead deadline would be the end of 2021, because that's when any contracts that come due after that, they're tied to the LIBOR, the IBORs, the interbank lending rate. Their rates are tied to that, and those go away the end of 2021. So between now and then, and this is really, you're talking about what's going to trigger it, but what they're doing right now on a global basis is that central banks are attempting to create a whole new benchmark to take the place of those interbank, those IBORs. And then they have to create a whole market for it. And then when they restructure those debt instruments, the bonds and whatever that's written against that, the derivative contracts is really what puts us in the biggest risk. But they'll then, once that's established, then they can start converting those contracts. All of these are a big experiment. That's what people don't understand. They have no roadmap. It's not like this has ever been done successfully historically. And I don't think it's going to be done successfully now, because even if they did, As soon as it goes into that new contract, the valuation changes, impacting the valuation of all of the banks. And the banks are already zombie banks. So, I would say that an absolute drop dead deadline would be by the end of 2021. But we also had the yield curve inversion. And typically, from, on average, when that recession really shows up is about 18 months after that happened. So much as you hear everybody blaming the trade wars for China's slowdown, May 2017 was when their yield curve inverted. This is way more than a trade war. That may be exacerbating it, but it didn't create it. We already knew it was coming. So that's why everybody's probably hearing the talk about a recession in 2020.
Right. Okay. Yeah, that's interesting. So they're going to transition us into a new system, obviously. And I think the IMF's made it fairly clear that eventually we have a digital system coming. I mean, Christine Lagarde's come out and basically said it. They've told us what the plan is. It's a central bank cryptocurrency type of arrangement. But they've got how they're going to get us there, I don't know. Or what are your thoughts on it? Are they going to let everything crash and then have a sufficient crisis that they go, we have to do this? Or are they still working on trying to set something up? Or how do you think it's playing out?
Well, they've been getting us used to getting more and more comfortable in holding our wealth intangibly and doing transactions kind of blindly. I mean, you're not face to face with anybody. So they've been preparing us for it. And, you never let a good crisis go to waste. So, yeah, we need to be scared enough to accept whatever garbage they would like to put down our throats the next time. And, I just did this huge event. And so I was buried inside of the strategy that I developed based on my studies, really at a much deeper level than I usually go. And I realized that, I became a stockbroker in 1986. And I went to Shearson because at the time they had the best training program on the street. And I remember thinking to myself, wow, they're teaching me how to sell an intangible. And that was accurate. And when you stop and think about, well, what was happening in the 80s, that was globalization. And what they were doing was creating basically an army to get the general public used to holding their wealth inside of Wall Street and inside of the system. But those tangible assets, well, if you hold them in your possession, you own them outright so they don't run any counterparty risk. And if you need to ever liquidate them, you can do so. If you hold your wealth in the system and they push a button and you have no access to it, you have no access to it. And it doesn't really matter what you do, kick and scream and pound, or who are you even going to complain to?
Yeah.
So holding that wealth, intangibles, the gold, the silver, but anything that's physical, that's outside of the system. And that's really, you can think of it like a savings base. If you hold everything inside the intangible system, you don't really have any savings. You're all in speculation. Talk about diversification or the lack thereof.
So what about bail-ins then? Do you think that'll happen, that the bank will actually, use the people's money to save the supposedly failing banks when it does go down?
Well, for one thing, once you make a deposit, read your new account form. You are no longer the legal owner of that wealth, so it's not your money. That is one big perception myth that we all have. And absolutely 100%. I mean, they've been testing it all over the world. Yes, the banks will bail that in, and then we will bail that. The taxpayers we'll bail them out into a hyperinflationary fiat money that has zero value. And that's what resets the debt. And then they can take us into a new system.
Okay, so
they can't do it before they reset it.
So they will basically start printing into oblivion, say at the end of it, this isn't working anymore, we have to stop it and change into this new system.
Exactly. And I'd like everybody to kind of stop and think about what those many trillions in US dollars, but in global dollars or in global money, fiat money, the central banks have injected into the system since 2008. But they still can't raise interest rates, and they still can't withdraw the purchasing support from all those plunge protection teams and all those other schemes that they've created. Because as soon as they attempt to do so, as we've seen in the US with FedPal trying to raise interest rates and just run off the maturing debt from the balance sheet, and the markets went crazy. So they want you to believe that it worked, but it didn't stimulate the economy into having a self-fulfilling, sustained growth rate. It only made their fiat money products look like they had more value because of those numbers. But that has not correct. It hasn't fixed any of the problems that got us into this mess at all. Frankly, it's made it worse. So yeah, the system has to reset.
And the US dollar is the world reserve currency. That day's coming to an end. And then is it going to be an Eastern world reserve currency, or is it just going to be an IMF SDR? What do you think?
I believe it's going to be the IMF SDR. I don't think we're going to have one country that controls the world reserve currency anymore, because it requires them running massive deficits if they've got to inflate the world, which is, what the US dollar did. There are some advantages, there are disadvantages. I am, I'll go 99.9% sure that it will be the special drawing rights, the SDR of the IMF, which doesn't even take debt to create it. That merely takes pushing a button, and it's not a claim against anything. So it's even worse than what we're dealing with now if we allow them to get away with that.
And meanwhile, they're setting up global biometric identification systems to be able to get everyone into this whole thing, so that everyone in the world will be biometrically identifiable. So you can't buy a trade without being in their system. I mean, that's pretty obvious. And get rid of cash. A war on cash. Some countries, I guess, worse than others. Do you know what the situation is in Sweden? Have they got any cash there now, or is it just about totally cashless?
Well, it's just about totally cashless, but they've gotten people to buy into that benefit, and it's kind of like how do you capture a wild boar? You put up a fence. You put out food every day for a week, and every day they come and they eat the food. And then one day you go out and you put in one side of a fence. And they're a little hesitant at first because it looks unusual, but you put the food there every day so they get used to it, they eat it. And you do that with the next side, you put up the next side of the fence. They're a little hesitant, but then they get used to it. And before you know it, you have them all fenced in and they volunteered, and they don't even realize it. And this is really the same way, because when you read their documents for the banks, the advantage is that there is no limitations on what they can do and how rapidly they can send their policy through the economy, which right now, if they make a policy decision, it takes about 18 months for them to see, is this working? Is this not working? So specifically, they're talking about lowering the interest rates and going below zero. If you have cash, then you can still protect your principal with it, not your purchasing power, but your principal. If you're all digital, you can't even do that. So they can force you to spend to stimulate the economy. And if you're not doing fast enough, they can take your principal away faster and faster and faster until you do spend that money, which by the way, is a form of hyperinflation, because that's what you do during that period of time when you see the value of the currency drop so much. But, having said that, what we're really looking at in this whole scheme of things is even more important to have gold and silver outside of the system, because then at least when you want to transact, since there is always a buyer of physical gold and silver because of its many uses and its very broad buyer base, you can always liquidate it into the system and have the cash or the money that you need in the system to buy your goods or your services or what have you. So it becomes even more important to have that tangible base outside of the system.
Yeah. Can you imagine our grandparents believing there'd be a day where there'd be negative interest rates? You put your money in, you're paying the bank to have your money. I mean, it's like, and people are accepting this as normal. It's, I mean, we haven't quite got to negative interest rates here in New Zealand, but what about Europe? I mean, and in fact, what is going on in Europe? What's happening in Italy?
Well, it's Italy is in jeopardy because we've got the rise of the nationalists actually happening really on a global basis. In France, it's the yellow vest, but people are very tired of watching this income inequality. And, like you said in the beginning of the show, people think the markets are, so everything seems okay. Well, that's not really true. People's income have not kept pace with the rapid inflation in the value of the currencies that's happened since 2008. You can say it, but you go to the grocery store, you go to the gas station, or you go to a doctor's appointment, whatever you do, it costs you a whole lot more, and incomes have not kept pace. So Europe is really in process of breaking down. That whole peg system where all of those economies were pegged together so that they're supposed to behave like they're the same. Well, Italy's economy is not the same as Germany's economy, right?
Yeah.
Great Britain wasn't tied into the euro dollar, but they were tied into the experiment. And if they leave the end of March and it's a hard Brexit, in other words, they don't have the systems in place, you've got most of the derivative trading and the hypothecation, which is using other people's equity to borrow and play with. I mean, if they don't have those agreements in place by the time Great Britain leaves the euro experiment, I mean, we could see a catastrophic event when Brexit happens.
So
I don't know.
Yeah, Brexit's due to happen that soon, is it?
Yeah, the end of March. I think it's March 25th or March 29th.
Okay, so that potentially could be a real trigger point.
Huge.
Yeah.
Yeah, because most of those transactions were done in the city of London.
Yeah.
So they need to have those agreements, or what happens to all those contracts?
Good
Can they cover up an implosion like they did in Greece and other things? I don't know. I think that might be too big, but we'll see.
Well, I mean, is Italy in the basic stage, beginning stages of imploding at the moment? We saw it in Greece, or Italy's a bigger economy.
It is a bigger economy, and yeah, they are, because those banks are insolvent, and that doom loop between the banks funding the government and the government loaning the banks money to fund the government. That's that doom loop that really came out when they were going through the sovereign crisis in, was that 2014 or something like that? 2013, something like that. Well, that's back again. So it's a big problem, except that the difference between then and now, then they installed a technocrat to run the government for a moment. Now you've got the rise of populism in there, and they're bucking the austerity, they're bucking what the ECB wants. So I mean, and I don't know why anybody's surprised, because you can never really, a peg never lasts forever. It only lasts for a minute. This one is breaking down, and it started with Greece. It's not starting with Italy. It started with Greece and Portugal and Ireland and Spain and that whole thing. It started then. They haven't fixed it either. There's your negative rates. They haven't fixed anything.
Yeah, and what about Germany? What's happening there? Is it the German economy? How's that faring? Or supposedly?
Well, that supposedly it's the better horse in the glue factory, but much of Germany's GDP was created from exports. So, and I mean, that was a big part of the reason for the peg, was to enable these other countries to take on a lot of debt and buy stuff from Germany. So if their economies are breaking down, that's not really good for supporting Germany's economy either. So it is stronger because they have more of a savings mindset. But, it doesn't matter. Everybody always thinks, well, it's different here. Everything else can fall apart, but we'll just be fine. No. And look at what they're doing with Deutsche Bank. I mean, Germany's got Deutsche Bank, for God's sakes. And now what? Deutsche Bank and Commerzbank, the two worst banks in the universe, are going to be, merged? Are you kidding me? Because Deutsche Bank's derivatives, those derivative bets, dwarf the German economy. So it might look a little better, but they've got they've got the worst zombie banking system in the world. Morgan Stanley in this country is not much better than Deutsche Bank, but they got Deutsche Bank. How good can Germany be doing with Deutsche Bank?
True. Okay, now what about the manipulation of the metals market? And I think there's maybe 5 cases being put up against JP Morgan for manipulation. Do you think there's going to be anything that's going to come of that, or is this just going to be all hot air?
I think probably what will come of that is the same thing that's come of it every time that it's been brought up and even admitted, which is probably not a whole lot of anything, because JP Morgan controls the physical markets, particularly with silver, but also with gold, just like they control the digital markets with those future contracts. I mean, a bank controlling both both sides of the trade is, I don't know, maybe, a little monopolistic. I don't know. What do you think? But, here's the bottom line on that, because it can certainly keep manipulating those markets. But what people need to just know, they don't have to question it, they don't have to think about it, just know it, because it's happened over 4,800 times, 100% of the time, is that when a country resets their currency, they do it against gold. And gold is the primary currency metal. Silver is the secondary currency metal. So gold is not going, I don't really care what it does inside of this manipulated market. I love the fact that they suppress the price and keep it so undervalued, because it enables me to just accumulate at a cheaper price. What I am waiting for is the reset, because like we saw in Venezuela, overnight, it went up over 4,200 times. Now, in the black market, it was going up long before that. So I'm just talking about the official reset, and it's been going up ever since as it moves toward its true value in terms of Venezuelan bolivars, which really have no value. But my goodness, you can sure buy a lot of stuff, good stuff, in Venezuela, real estate, rights. I mean, in Brazil, they're starting to sell off state-owned assets. This is what a desperate government does. And, I know it's hard for people to imagine, well, I can't own an oil company. I'm just a normal person. But if you position your wealth in the right way, right now, those state-owned assets are probably being purchased with an awful lot of leverage and debt, which means that as the reset occurs, those assets are most likely to come back on the market at a much lower price relative to gold. So there is not one little teeny weeny doubt in my mind. I mean, I'm 100% certain of this, that the opportunities that lie ahead of us, if we are properly positioned with real money, tangible assets, then we are going to have the opportunity to build a wealth base in other tangible assets that are really your savings base. Think of like the Queen of England. A few years ago, stories came out where she only had about £1.5 million left. But what else does she have? I don't know. All that real estate, all those castles, all that fine art, all those gems, all that gold and silver. So this is wealth that's lasted in that family for hundreds and hundreds of years. It's the foundation of their wealth. Then if you have a little bit in cryptos over here or a little bit of speculated stock over here and that goes wrong, big deal, you still have your wealth foundation. Does that make sense?
Yeah, it does. You mentioned you're quite happy to keep accumulating if they keep suppressing that, and I hear people say, "Oh, we wish the thing would just hurry up and blow up, and just let's get this thing over and done with." And my kind of response is, well, I'm actually not in a hurry to see it happen at all. I'm quite happy that it stays like this because we don't really know just how bad it's going to be when it does blow up. I mean, the people in Venezuela, how happy are they? Even the ones that have 90%. Yeah, exactly. And are we going to see Venezuela on a worldwide scale? I mean, who wants that? Even if a few people, prosper out of it, the majority won't.
Exactly. I mean, the difference between the globe right now and Venezuela is just the speed of the inflation. We're inside of a reset event because inflation resets the value of your fiat money that you work for and try to save every day. And most countries' target is 2% so that it still happens, but you don't know it, so you don't do anything different about it. That's why they have that 2% target. Whereas Venezuela and Brazil and a lot of other Turkey, I mean, there's a lot of countries where it's happening a lot more quickly. It's happening. This isn't something that might happen or might not happen. It's happening. The difference is the speed of the happening. So I'm with you, Tony. I take it as long as you want to take to get there. I don't really care because that just enables me to get myself and us to get our clients into a position to take advantage of what's happening so that we can retain our freedom. And even maybe, I don't know, build a legacy. So, when I'm going to digress here. When I first became a stockbroker, you never heard about anybody outliving their principal when they retired. Because you could get 10% on a government bond, which at that point was, I don't know, more conservative than it is today, but 10%. So your goal was to establish your principal and then live off the interest. Well, all these years of zero interest, forget that. That's not coming back again. They can't even raise the rates, and they have to start attacking your principal. So with the strategy that I developed just based on repeatable patterns, since I've been studying currencies since '87, you can never outlive this principle. You can't. And when you're no longer on this planet, now you have something to leave the next generation. Because if we don't do that for our children, for our grandchildren, they will not have the same choices that we had in this lifetime. Because they want to take us to a sharing economy where you have a small group of people that own everything and everybody else that rents.
Yeah.
And if you don't own it and you're renting it, guess who gets to dictate how much that's going to be?
Yeah. Yeah, well, I mean, we're sort of heading to this global socialist agenda happening big time, and with a few people at the top above everyone else, and it's so obvious that it's happening, and it annoys me that many people can't see it, and they can't see that the war on cash is all part of this, and governments clamping down, saying, well, we're having to do this because of money laundering, and all of a sudden everyone's money laundering that owns cash. It's just and people are being brainwashed into accepting this.
Right. And you know what else I love? And I was talking to somebody the other day, and they're like, well, I can't take out more than $5,000, so I like to take out like $4,500 because they're going to report me to the IRS. He said, well, you can take out as much as you want. You're going to have to let them know because banks don't hold cash. But it's not illegal at this point in time to take out any amount of cash from your bank account. And yet they've done such a good job with that perception management. Ooh, I don't want to do it. They're going to report you. Yes, you want that paper trail for when you have to deposit it back in to pay that bill or that mortgage. If you leave it in there and they declare what for them would be a holiday, but a bank holiday, you're going to be very limited on what you can take out. So I personally don't keep much cash in there. I mean, I have to because auto withdrawals, and you got to keep the account open because that's still our tool of barter. But yeah, I mean, we have to do things within the legal limit of the law. Look at what they've done for themselves. You do it. Whatever the smartest guys in the room are doing for themselves, if you can emulate it, do that. They're buying gold as fast as they can. And they're manipulating the price so it's cheap, but they wouldn't care about the price. I mean, they shouldn't care about the price, other than a rise in gold price is an indication of a failing currency. That's why they care about the gold price. But to buy it, it's fiat. It doesn't mean anything.
So JP Morgan's obviously got a huge holding in the silver. Is Germany one of the banks that's still central banks that's still going for gold, basically?
I have to look at that. I don't know that one right off the top of my head.
I know they were. So yeah,
I imagine they still are.
Yeah,
and I also imagine that regardless of whatever any central bank reports, I don't think we really know the truth.
Yeah. Okay. Yeah. So we don't really know how much gold China has for a start. That's hugely kept secret, really, isn't it?
Yes, it is. I mean, no gold gets exported that they've mined. No gold gets exported from China. So who knows how much they're really holding?
Yeah. So 2019, I mean, nobody can predict, but do you see anything major happening that's going to affect everyone before this year's out?
Well, certainly Brexit and what's happening in Italy. So I think Europe is a huge hotbed, but it's almost like the dominoes are falling in hyperinflation too. So it would not really surprise me to see us go down and test those lows that were made on Christmas Day and even break below them. I mean, the trend cycle is definitely negative, even though the markets have been up a little bit since the first of the year. That doesn't change the trend. And there was an incredible amount of technical damage that was done in 2018. And I think it's just going to get worse into this year.
And people always look towards the Northern Hemisphere fall, or what we call autumn, as being the time when it seems to be the most volatile. So there's that to look forward to at some point.
Well, I think that the next big test is coming up with the Brexit, and that's the end of March.
Yep. So, okay, we'll be watching that. So now, can you tell our listeners basically what you do and where they can find you on the internet for those that don't know?
I'm very happy to do that. We have a YouTube channel, ITM Trading. If you go to YouTube, or you can probably put my name in there, Lynette Zang, and that'll come up. But what we do is we deal in physical metals, primarily the currency metals, gold and silver. But what makes us different than anybody else is that we execute a strategy that's based upon the repeatable patterns that I saw as a stockbroker in currency life cycles and in market life cycles. And what we try and teach, and not just on the YouTube channel, but we work with our clients really closely because we'd like you to be able to identify simple things for yourselves so that nobody can ever pull the wool over your eyes about what's really happening and what true values are. So we're a very different kind of gold and silver dealer, and we help people develop customized strategies, because your circumstance is going to be a little different at your age and in your circumstance than mine is at my age, in my circumstance. So we help people establish their goals and then help them position into what is going to support those goals. But the goals come first, and education is key.
And what about debt? What about debt? Are you telling people what are you telling them to do with debt?
If it's, well, I'll tell you, if it's variable rate debt, you want to pay very close attention to the interest rates, because once they start spiking, you will never get out of that variable rate debt. So personally, I do not have any, nor can I recommend it. But if you have fixed rate debt, part of the strategy is designed to settle that fixed rate debt, just like the governments do, with a currency that has no value. So if you have like a mortgage or a longer term car loan or any kind of fixed rate debt, that goes into the strategy for sure. You cannot fix a debt problem with more debt. We want to get rid of that.
Cool. So once more, the website and the YouTube channel?
Well, the website is www.itmtrading.com. And if you go to YouTube and you put in ITM Trading or Lynette Zang, either way, they'll probably come up. And we do a lot of really educational content every week, as you know.
Yes, very good Q&A and stuff like that on there. So excellent. Now, I think that's pretty much covered all the questions I had, and I know we've covered a lot of ground. It's been awesome. Have you got anything that you'd like to maybe say at the end here? That's anything I've missed on?
Wow, I think you've done a great job with coverage today. So we'll just save it for the next time.
Sounds good, and there will hopefully be a next time before too long, and will be interesting to see what's happened between now and whenever that is. So awesome talking to you again today, Lynette, and thank you, and thanks Megan too for organising it as well. So much appreciated.
It's our pleasure, and one of these days I'm going to get out there. I'll surprise you.
Sounds good. Thank you.
My pleasure. Bye-bye.
Bye. So people, don't forget to visit aminutemidnight.com. You'll find all of our A Minute to Midnight episodes on our website, as well as on iTunes and YouTube. And we have articles placed on the website fairly regularly as well. And all the music in the shows is written, played and recorded by me. If you want to download free music, you can find some of that on the website too. So that's aminutemidnight.com. Hope you enjoyed today's show. We will be back with another episode of the A Minute to Midnight show in a few days' time. Until the next show, God bless, have a great week and take care.